Good morning, ladies and gentlemen. This is Arnie Lukes here at the Freedom Forum, and today's guest, Wallace Klinck from Canada. Welcome, Wallace.
I'll do the best I can. We're freezing here. It's been down around nearly 40 below again. And this
Ah,
is February, the worst February we've had in 40 years.
wow.
So I'm trying to continue to function here.
Oh,
But
good work.
anyway, I guess today maybe we thought we might deal with the compensated price, the
hmm
social credit, one of the two major recommendations that Major Douglas made in his social credit recommendations. And I think um, I think it's important that it be discussed because it seems to be a subject which many people seem to stumble on.
hmm
The dividend is simple enough to conceive. I mean, you're making a payment to consumers in
hmm
order to assist them to buy what they can't buy because they don't get sufficient purchasing power
hmm
from the operation of the price system. And of course, today we compensate or try to compensate by filling that gap with debt, which does not fill a gap because it transfers or reincarnates those costs as charges against the future in the form of debt.
hmm
Sure, we can borrow money and buy what is there on a rather irregular, uncontrolled basis. But in any case, that allows us to absorb a lot of the product that is coming off the market. But it doesn't liquidate the costs of that production because
That,
if you borrow money to buy it, you don't liquidate liquidate the costs at the point at the producer level, but you don't liquidate the costs in the final sense because you transfer them as a charge against future production. So
hmm
in fact, you don't liquidate them, do you?
Okay. All right. Now, I think that what we've done is we've the horse has come out of the gate, and that's fine, but it's traveling a little bit too fast, I think, for most people. I understand what it is. Now, let's just put it back so that it's understandable in a sense for the audience. The Major Douglas social credit,
Mm-hmm.
he proposed two financial mechanisms in order to place sufficient purchasing power in the hands of the community that reflected the cost of production of what the community can produce.
Mm-hmm.
And also, the second one, of course, the first was the national dividend, which you've just spoken about, and the second one was the compensated price. And essentially, it was an adjustment that was made at the point of sale. So this is the financial side of Douglas Social Credit. Now, Douglas Social Credit covers an enormous array of subjects, but we're
Mm-hmm.
specifically talking about finance today, and in this case, the compensated price, the point of sale where an adjustment is made in the actual sale price of the product in order to balance the financial system so that it's in equilibrium and that we
Mm-hmm.
as production increases, so the cost of production reduces, and therefore the price at the point of sale should also reflect that reduced cost. And so the compensated price is there to respond to that phenomenon. Wallace.
That's right, Arnie. We have prices, and we should understand, according to the social credit analysis, that those prices are far in excess of the real cost. Douglas was an engineer. He measured things in terms of energy applied to materials, ergs, whatever you want to call them,
Mhm.
and he conceived cost in terms of in physical terms, not in financial terms. Financial terms are a result of our conventions of accountancy,
Mhm.
but physical costs are getting down to the base realistic level of cost.
Mhm.
They're not a representation of cost. Now we have to ask whether our representation of cost is actually correct or not. And
That's
Douglas
that's
said,
that's most important, Wallace, that our actual cost is a representation of the physical cost, because the the price system that's currently in existence at the moment is one of exerting power, because the overemphasis of debt, and of course the banks are the custodians of issuing new debt, and then of course it empowers them. Whereas Douglas actually undid that power and placed it in the hands of the consumer. And that's what
Mhm.
this mechanism is about. It's about placing power. Think about it, ladies and gentlemen. It's about placing financial power into the hands of the consumer, doing away with the power of ultimately central government in the form of the money power. Wallace.
That's right. Douglas is about the decentralization of power. A lot of people, when they hear the word social, immediately they think of socialism. It's not socialism in the classic sense at all. In fact, it's an inversion because socialism is an increased centralization of power in the hands of the state,
Hmm.
of an administrative state where their bureaucrats administer the major functions in society. We as social creditors want as much as possible. We recognize that we associate on different levels, but the individual should be able to conduct his life as independently as possible, and should not have his independence and the power to control his lives being constantly filched by the state. The state is meant to serve the individual,
Hmm.
not the individual to serve the state.
Mm.
It's a
That's a
very different conception of life.
it certainly is. To me that's a complete inversion of what we're seeing. We're seeing that the state is essentially insisting that they are all powerful, and even to the point where different, if you like, mediums of influence, whether it's the media, whether it's the pulpit, whether it's TV, it's the industrial leaders, they're all insisting that power needs to reside in their area. And of course, when that happens, then of course it's the taking away of, if you like, responsibility and power from the individual. Social credit is about decentralising power. Wallace.
Yes, and if we can arrive at a proper evaluation of cost and make sure that that actually ends up as an advantage to the consumer,
Hmm.
then in terms of reality, we are actually effecting a decentralization of power in terms of reality.
Hmm.
Today, centralization of power is being accomplished by essentially accountancy means through the financial system, which has a monopoly on the issue and cancellation of credit.
Hmm.
And it what happens is that it actually premature in the price system, money is prematurely canceled and is not available for the consumer when those goods are finished. And
Hmm.
so that is the basic defect. Now, Douglas, in his original book, Economic Democracy,
Hmm.
had done a careful but very succinct analysis of the price system, and he demonstrated that the producer is not really able to recover his costs.
Hmm.
Now, there's a possibility of issuing money to the producer directly, but that would not solve the problem because we're trying to make sure that the product of industry is distributed to the consumer. So it's important that we distribute the money not directly to the producer,
Hmm.
but to the consumer so that the consumer can actually access what's coming off the production line.
I think that's a very good illustration, Wallace, of the when Douglas talks about economic democracy being demos coming back to the people.
Mm-hmm.
What he's actually insisting on with the national dividend is, now let's just work this through one at a time, is that he is handing, in this proposal of the national dividend, he is handing financial voting into the hands of the consumer. And that's one thing. But the other, of course, is that the compensated price is essentially a mechanism to encourage the consumer to make an honest vote. And if that's an honest vote, monetary vote, then they will buy what the producer makes. And if it's not, then the producer is making something that may not necessarily have the real endorsement of the market, the individuals, the community. Wallace.
That's quite true because if you're forced to produce more and more, merely so that you can purchase what's produced in the past,
Hmm.
then obviously you lose control of what is being produced. In other words, the actual policy of production resides in the hands of the state and in the financial system rather than with the consumer. And after all, production is meant for consumption.
Hmm.
The
Yeah.
consumer
Mm,
is to be served by the production system.
mm,
The consumer is not supposed to serve the production system. It's supposed to work the other way.
mm. It's interesting.
And
I can see where the power coming back to the consumer, if you like, on this, and it also, when we talk about this centralization of power, it's actually taking back this centralization of power even away from the industrialist, in that
abs-
they are obliged to produce something of quality and durability. And on that basis, then the market or the individual community will respond by buying it. But
absolutely.
if they do, as we see in designed obsolescence, we see articles produced that have very limited life cycles, then of course the consumer can vote accordingly against them by not purchasing. So to me, this is what it does is it's disassembling the monopoly of credit, disassembling the monopoly of government, and disassembling the monopoly of industry. Wallace.
The whole pyramid of power that works down from the financial system through the productive system is being readjusted so that power resides within the individual rather than in the pyramid
Mm-hmm,
itself.
mm-hmm,
And that is what we're trying to do. We don't want a pyramid of power. As Douglas said, you have to have pyramidal control of a specific function
mm,
because you can't have some kind of a prolonged debate amongst non-professionals and non-experts about how to do a specific thing. You need experts, and you can't get into a protracted debate that is
mm,
more associated with abstract matters than the task at hand.
mm-hmm,
So you want efficiency, but you must have a sanction in order to ensure that that efficiency is directed to the benefit of society. And that's where the consumer comes in, the consumer's choice. The consumer has a sanction in making his choice by voting with his money,
mm-hmm,
with his purchasing power for what he considers to be as the proper result for his benefit,
mm,
not what somebody else dictates.
mm.
I mean,
I've,
I was in a comparative economic systems class one time, and a former director of mining in Czechoslovakia, central planning, was giving a lecture. And he went all across the board with these. Well, first they started with these input-output tables. Well, it got so complicated that they just kept falling behind and behind all the time. They were trying to conceive what should be produced and consumed by society. And then they thought, well, this isn't working, so they started with differential equations, and he had these all from one side of the room to the other. And then all of a sudden, he turned around to the class and he said, "You see, it's impossible."
mm,
So I said to him afterwards, I said, "Professor so and so," I said, "when you think about it, is it not the ultimate arrogance for people to sit on top of the mountain and try to conceive what everyone else should produce and consume?" And he said, "When you think about it, it is, yes."
mm, that's right. I mean, I make decisions, we make decisions every day, and especially around our home. And on the basis of those decisions, we're taking new information into account. Just this weekend, I spent time shifting the watering system, and that was taking into account the needs of the emerging, evolving garden, and also, of course, the influence that the watering system would have on the plants. And to me, you can't plan these things. You can't stand back from a distance and plan it. And so it is with industry. Industry is today is where it is, but the fact is that today a younger, a smarter, an older, a wiser engineer could come up with a new concept, and that new concept throws something on its head, and on the basis of that, industry needs to adjust. So to
And you
me,
can't,
it's quite
yeah,
dynamic.
you can't expect unfettered initiative to emerge from a group because a group is controlled.
Hmm.
The policy has to be controlled through the group.
Mm,
And therefore initiative is blocked up. A young Russian told me, he said, "I don't know." He said, "We work, but nothing seems to happen."
Mm-hmm.
It's because efficiency is blocked by all of the bureaucratic interference in the
Mm,
system.
mm,
And
mm,
that's just no way to make things happen.
mm, That I find that is a valid comment, Wallace, because the we're seeing more and more influence, government, bureaucrats, if you like, over us more and more every day. And the fact is, it's not actually serving us at all. It's dominating us, and this needs to be this, if you like, this yoke. This yoke needs to be cast off.
Yeah,
And
we in Canada, our energy industry now is just in a shambles because pipelines are being denied and delayed, particularly, and
hmm
just wearing industry down by the enormous costs
hmm
because they've spent all this money preparing for some of these things. And then the government gets into the act, and you have these protest groups, and the whole thing gets to the point where it just gets bogged down in incessant debate, argument, and recriminations and all sorts of it just seizes the whole system up.
mm, yes,
Yeah.
it
And
seems.
so
Yeah.
anyway, the question of the compensated price, there's a deficiency of purchasing power, and social credit wants to create new money, the money that is now being created by the banks as a debt,
hmm
instead by creating a national capital account, and which represents actually the evaluation of the productive assets of the nation,
hmm
is something that governments don't have. I guess you might say it's to do with accrual accounting.
That's
In other words, you're taking account of your real assets, and we would simply deduct from that account the money that's required to pay the dividend. But also, we would pay money to the retailer at the retail end at the point of sale in
hmm
order to allow him to reduce his price. There's not much point in issuing new money if, according to the quantity theory of money, prices rise to adjust for the additional money. It is important that prices be brought down. Now, Douglas said that the true cost of production is consumption. So if you get engaged in a project of production and you end up with a result, you should be credited for that result properly in the system that we use, the financial system or accountancy system, to reflect what we're doing.
hmm
And today we're actually double paying for our capital. The way it works, we're being charged twice for our capital. That capital should be credited to a national credit account, and
hmm
that should be a fund from which we can draw to subsidize consumption through direct payments to the consumer and to payments to the producer so that he can reduce the price of goods. And a lot of people seem to get confused. They think, oh, that there's going to be some bureaucratic monstrosity which is going to try and figure out what kind of a discount for each class of goods or each type of goods. Not at all. It is a general factor that is simply to be derived from the ratio of national consumption to national consumption in the aggregate. And it is a single factor, just like a sales tax is a single factor, right?
hmm
It's a 5% or a 7% or whatever it happens to be. And that percent, that factor would be used to adjust the price of all goods coming off the consumer price production line and consumer production line, and it would apply to all prices just universally. It
hmm
wouldn't be an individual thing at all.
hmm
Some people seem to be confused on that, and it's important they understand that it's really, as a matter of fact, what Douglas said. If I might just briefly read,
hmm
it says it should be emphasized that the practical operation of the price factor of this character involves no difficulty and is, in fact, in various forms, a commonplace of business operations at the present time. As compared with the complex system of discounts, which are a feature of every business and very not and vary not merely from business to business, but from one department of the same business to another. The application of a uniform price factor for the purpose of reducing the general price level is a matter of elementary simplicity. As an appendix to this book, a model scheme intended in the first place to apply to Scotland is attached, and it will be seen that a number of considerations not apparently arising from this theorem have been included. One consideration, but on consideration, it will probably be realized that the general principle explained in the foregoing pages form the basis of the conception underlying the proposals for the compensated price and
Hmm.
the dividend. So,
Hmm.
I mean, Douglas had, he had a very complex mind, and I think he was more than qualified to comment on this subject in this way.
Hmm.
It's not. It's actually a great simplification of the system. It would be a great reduction of cost actually because it would be a simple single factor.
Hmm. Hmm. I find that it's the more you look at it, the more you realise that he's a man of his time, and he's actually probably 100 years in front of everyone else, because we see the automation, we see the robotics, the advanced control, and we also see that the supermarkets are full, the shops are full, everywhere is full. The cargo ships are coming from China. China's producing most of everything for everyone, and our industry is being wound down. So that, to me, clearly says that we have an enormous productive capacity and, in actual fact, unrealised productive capacity. What we don't have is we don't have sufficient purchasing power. And to me, the issue of looking at the financial system and looking at the debt system overall, when we're watching our industry being taken offshore, we're watching our power generation being, in the case of South Australia, dynamited by our own government. I
Oh,
mean, that was just an act of wanton vandalism. To
sabotage.
It really was, and the incredible attitude to deindustrialize the world. And the fact is that we could actually cut back on so much just simply by locally producing and producing to the engineering and quality standards that we're capable of doing, but at the same time not producing two of things when we only need one of them. And on the basis that it has its longevity, it has reliability, durability in it, and that we're not trying to produce more so that we can sell it to pay for the cost of the first item, going back to work a second time. And this, to me, is the madness of the current financial system.
Well, we
We're going back to work to earn money to pay for the things that we already possess. It's
Yes, and
madness.
we've paid for physically. We've already put the physical effort
Yeah.
out, or the human and non-human energy into producing these goods. They're paid for.
Mm,
But we
that's right.
have to engage in further activity in order that we can access them by
Mm,
earning further financial incomes.
mm,
We've already produced the real income, if you
mm-hmm,
want,
mm-hmm,
incorporated in the goods themselves,
mm,
and it means just colossal waste,
mm,
and it leads to a rather than a quantitative uh, outlook toward economics. If you are just simply, I mean, the gross national product is just a gross figure,
mm-hmm,
but it incorporates a lot of things that are pure waste
mm-hmm,
and sabotage, quite
mm,
frankly,
mm. I,
because we have to keep people working so that they can earn a living
mm.
to buy the things that they're producing.
I find it ironic because the causes of war, the two audio lectures that Douglas has got that you'll find on our website and others, and the fact is that in America's case, they're doing all of this attempted expansion into other nations in order to seize the markets. And of course, one of the first things they do, especially in the Middle East, was they essentially obliterated the infrastructure so that they could rebuild it, simply to keep their own country working. Now
working.
that is absolute madness. It's absolute madness. They've gone into the Middle East, they've obliterated infrastructure so that they can sell new infrastructure to the country that they've just invaded. And
So it
it
raises the
absolutely
question, what is the purpose of life? Is it work or is it life?
yes. Is it work or is it life? Is it can they find out, sort out the anomaly in the financial system, and then they don't have to continually expand. They don't have to invade the Middle East. They don't have to threaten Venezuela or Russia or China or whatever. They can just take a step back and say, well, we've actually got enough. We just have to
Unfor-
make the financial system reflect that.
Unfortunately, the powers that be operate on a different philosophy.
Mm,
They operate on the philosophy of salvation through works,
mm,
not results.
mm.
And results and works can be very different.
No, well, they
If
are.
you're not if you're not efficient, you're not going to get very good results. But you're going to have to work harder and harder and harder to try and keep up with things.
So you essentially you're demechanizing the industrial system in order to keep everyone employed. That's really what's being proposed. It's being put on the table to demechanize, to turn the industry off, and we'll go back to pick and shovel and digging holes and filling them in again, rather than actually harvesting and harnessing the technology that belongs to everyone. It's our
Well, that's the
cultural
issue.
inheritance. Yeah.
Yes, because the labor does not produce all wealth; it produces increasingly less wealth, and that means that distribution should be progressively less dependent upon labor.
Mm-hmm.
In other words, we have an inheritance.
Mm,
This system has no inheritance; it's just work. The banking system does not give money away; they only lend money, and it's repayable from future effort.
mm-hmm.
We're on a treadmill, and we
That's
can't
right.
get off.
Yeah, that's right. That's
You know, it's
very,
interesting.
yep.
I've had two people with PhDs just in the last couple of weeks, probably, say that they regard Douglas as a genius.
Mm-hmm.
One of them, surprisingly, comes from the Middle East, from Oman.
Mm, mm. Yeah,
He was
that's right.
saying that in his experience, he took his PhD in London and Paris, but from his experience, he had never been quite satisfied with things. But upon getting exposed to Douglas, he's read all Douglas's works, major works. This initial work of Douglas, he looked at very closely, and he was puzzled because Douglas had said that raising the wage level actually results in a diminished net income. Now, he said this seemed to be rather counterintuitive to him, but he said he persisted with it, and he said the only way he could come to understand it was to put it under mathematical analysis.
Mm-hmm.
And he said when he did that, he understood what Douglas was getting at.
Mm, mm,
And he seems to be really, really impressed with Douglas.
mm,
He
mm,
called him a genius.
mm. That's right, and that's exactly how I see it. That the level of thinking that's come from Douglas and those around him is really there to harvest. And today we've looked at the compensated price, and it's we have to scratch our heads, but the only way to really appreciate what we're on about with this is to actually do your own time, your own scholarship on it,
Mhm.
to read the literature, and to have a serious look at everything that else is around there.
So
Thank you.
the compensated price recognizes that real cost is not the same as financial cost. That financial prices re- suggest a cost that is unrealistic and much higher than real cost.
Hmm.
And he wants to bring the prices down to reflect real cost in terms of energy expended.
Hmm.
And that means that the price level would be much, much lower.
Hmm.
And in other words, it's been said that he has, in a sense, made a modern application of the just pretium that the middle-aged theologians were attempting to discover. They didn't have the means to discover it properly, and so they weren't successful. But Douglas has actually brought forward a basis for the real cost of production.
Hmm. I'm just looking at a website, and I'm just going to touch on it, Wallace, because I think
Yeah.
it's quite important. This is the socialcredit.com.au, and recently you'll find that Social Credit Angles is there, and Will Waite is the principal writer for that. And the fact is that in here, and I can't find it at the moment only because my eyes are a little bit wonky, but there's some excellent material, and I noticed that from here, they've essentially done a mathematical assessment of the gross national product, the productive capacity of United States of America, and how much is distributed in 2014, the year 2014. And
Hmm.
so they've highlighted the what the national dividend should be for an individual and for families. And I'm
Hmm.
going to make sure that that link will go to the end of this bulletin. It'll be part of it, so that you're actually able to do your bit of scholarship and have a look at what other people are doing in regard to assessing the compensated price and the national dividend, because it's certainly worth the effort to go after it. I really appreciate your time today, Wallace. I think that we've only just touched on this compensated price, and I no doubt we'll want to do some more. And so appreciate your time and your contribution for today. Thank you very much.
And thank you, Arnie.
No worries. All right. Well, thanks, ladies and gentlemen. We'll catch you this time next week at the Freedom Forum. Cheers.